Yeah, hey, good afternoon, everyone. It is Monday and 3:30. The market's been closed here a little bit. Wanted to give you a recap and show you what the chart looks like. We had quite a bit of buying coming in to start the week, really on no news. And who knows if this will turn into something more significant than what than just a one-day wonder. You can kind of see this both ways. Okay, so we do have a red 13. We do have some formations here where you've got a break, you've got a small hook reversal, you've got another hook reversal, and now you've got another hook reversal. So you've got three in a row here on December corn. So corn is really putting up a fight at $5. We'll see if it bases and decides it needs to go higher. I think fundamentally you just got to keep the big picture in focus, right? Which is we have a big crop coming and we have demand that's pretty stinky. So in order to propel this thing much, much higher, on a sustained basis, and for us to really shift to a bullish stance, we have to have one of those two come in line. We have to either have more demand or we have to have smaller supply. And there's talk and rumors of hotter, drier weather patterns that will mimic 2012. Well, if we get that, then yeah, we're going to go higher and we're going to be bullish because naturally we're going to have less supply. But that's not evident yet. We don't see that, and certainly after 1 day or 3 days of trading, it's not enough. Can this accelerate and move higher? Sure. Where's our buy point? Right here at 531, right? That's exactly where we want to change our mind, and really anything under 573 is still going to have a lot of resistance. So the point is that corn has to go a long way before you should really turn overly bullish and before you want to get overly excited. So in our view, a move up into here would be for selling unless something is a confirmed catalyst that would really change our mind. But we don't see that happening at this point. So rallies are for selling, and we're pretty content holding our position right where we are, looking for lower prices, and until we get some more confirmation. Remember, this is a red wave 3, which is a bearish indication, right? So I'm a little bit worried that if anything, we're not bearish enough in our view, and I don't want to be too quick to come out of hedges. From a spec standpoint, clearly if we break $5 again, that should be sold, and otherwise you kind of just want to sit back and wait for a selling opportunity. All right, let's look at old crop, because I think it's pretty much the same. It's actually not as bullish as new crop. All we've done is rally back to the bottom side of this base channel that we broke out of last Wednesday, Thursday, and Friday. So we've tested it. We keep testing it, and in order for us to turn this much more bullish, we've got to get we've got to see some movement here. And I'm sorry, I'm looking at beans here on this chart, but the analysis is the exact same for beans and corn. We're looking lower and don't see anything in the price action to justify a long position here. In fact, beans traded an inside day. They matched Friday's low and they didn't quite get the high. So all this action with his as dynamic as it was just trading an inside day, and we haven't rallied back up into anything. So I'm not saying that it can't go higher. I'm just saying not enough for us yet today. So we're just going to sit and hold. All right, now let me show you old crop corn, because I showed you old crop beans. Old crop corn, not as bullish as new crop. And we are just testing the bottom side of this base channel that we fell out of. So if we do trade up into this area, up into the $5.96 area, then we may need to look at something different, because that's a lot of chart support, from this area back here at 602 down to the 580 area. That's a lot of chart support that should be resistance. And if it doesn't hold and you're trading and you come out the top of this, then not only are you breaking all that resistance, you're also breaking up above our trend line or above our hedge line. So from a buy standpoint, that would confirm a bear trap and something that we want to be cognizant of. But you don't have that yet. You got to get more price action under your belt before you can really assume that and accept that position. We're looking lower because of this 3 and because of this 5. We're looking for lower prices until we get down into this 530 area and maybe even lower. So we'll see what happens. the next few days, and we'll flip if we need to. But right now, I think all systems are good. Okay, now let's look at Kansas City wheat. And where's my new crop? Okay, this is the weekly chart that we talked about last week. Let's go to the daily chart. KWEN. All right, here is your chart of daily chart of July wheat. We had the big break that started on Wednesday or Tuesday, and then we have a reversion back to the bottom of the hedge line and the bottom of the daily cloud. Obviously, we want to have a bullish bias up above this area, and there's just so much chart resistance up in here. I'm going to have a hard time getting really bullish wheat unless something dramatic happens. But nevertheless, if we're above that line, we'll have a bullish bias, and below it we're going to have a bearish bias, and we'll let time be the deciding factor as to which way wheat goes. So I don't really have anything new to say there, other than we're going to stay hedged in all three and look for reversals later on in the week based on kind of the trend is your friend methodology. So with that, that's all I've got for you this morning. Every day is a new day, and a day is not a trend. So you got to stick with what the market has been revealing to you, which is we are in a downtrend. So stick with that, and all will be okay. And if you have questions or want to talk more about how that works, just holler at me. Call me. Happy to talk about it. There is risk trading futures and options, and you should only do so in light of your own financial condition. Have a great night. We'll see you later. Bye.